the receivables were 30 days. So they were getting paid in 30 days, but their accounts payable was 120 days. It was ridiculous how far out it was. So they were getting all this money in and they could keep it because they didn't have to pay for it.
Warning: Damian Andrews' growing revenue and profit, if implemented, will put more money in your pocket. Please use with caution.
Damian Andrews here for growing revenue and profit. And we've got this super exciting topic today talking about accounting tips to be successful in your business. And I know you're probably going, oh, but it's really, really critical. In business, there's 3 skills that you need to have, well, I think in life as well. One of them is accounting. If you don't understand where the numbers are at, then you're in a lot of trouble. The other one is legal. You need a bit of legal knowledge because a contract is essentially just an instruction. You wouldn't go and play a sport if you didn't understand the rules. Same token, business requires contracts. You need to understand the rules. The contract is just the rules of whatever agreement you've reached. And the third one is people skills, and we talk about that a lot because especially in today's environment where there is a lack of employees, then that demand is high. The supply is low, put it that way, of employees compared to what we've been used to for the past 20, 30, even 40 years. And that demographic is not going to change overnight. So we need to adjust how we do with that. But we need to, accounting, highly important, really. And it's one of the things that I find I get a little bit lit up by that. And I was a straight A student in accounting, which is kind of sad. I got honors for that topic. But it really is important to understand the numbers. And I think I was just really good at seeing it in my head. It's kind of like the Matrix type thing. I could just see how it all worked. But from that perspective, there's a whole bunch of other elements that you need to have to make that work. And the human component, getting the people to work together is really, really important. And that's where one of the tips that you want to have is to have a close relationship. Your financial team and your accounting team, your financial planning team and your accounting team need to have a close relationship. And this ensures that they're able to understand what each is doing. We need to obviously be planning for the future and understand what that is and how that's going to work. But we also need to know what's happening. Is it actually coming? Is that plan coming into fruition? Do we need to make adjustments? What's actually happening? And having that close collaboration between your financial planning and your accounting team is really, really important because you can then adjust things quickly. When the plan is, you can get that feedback from the accounting department going, oh, actually, that's not happening. Because a lot of times, as I've talked about in other podcasts, the financial reports will be done end of the month. By the time it's prepared and got to the board, it's at least 6 weeks down the track, and that data is just so far out of date, it's not relevant. So you need to have that information available between the parties and have that close relationship. The other one is, and this should be obvious, is well-organized or well-structured accounts. Having the right accounts as well. I've seen many organizations where they've got all these different accounts and they're all over the shop and a lot of them aren't even relevant. They don't provide useful information. That's the purpose. You want to make sure that you need to understand this, that the purpose of the accounts is to give you information. And if they're not well structured, if they're not relevant, then they're not going to be giving you the information that you need to have. And the other part of that is to give you the information you need to have. They need to be up to date. They really need to be up to date. This is important for a number of reasons. One, it's the information is up to date, so you're actually getting useful information. And as we talked about just before, if it's going back to the planning team, management team, that information is really, really helpful. Great for making decisions. And the other thing is there's a lot of inefficiency that happens near the end of the financial year when we're running to adjust accounts and get them all up to date and sorted out and trying to work out how everything balances. Massive amount of cost is spent there. And certainly in this environment, you want to be lowering your costs as much as possible. So you also need to have, again, effective budgeting. You need to have the plan that works really well. And this is, you want the budgets to be sorted and again, in accordance with the way the company operates. What are the objectives? What are you trying to achieve? And that budget needs to be reflecting that and what you're trying to achieve. But also too, you want to have the budget reflective of how the accounts are structured. I've seen that so many times where they'll create a budget and the line items in the budget don't match the actual reporting that's there, and it's a nightmare to reconcile back. So you want to use that same chart of accounts all the way through the organization, from budgeting to right through to the actual accounting itself. Um, the other thing you want to do is really, really have a good understanding of your receivables. This is really, really critical for your cash flow. You need to understand how that money is coming in and how long you're waiting for that money to come in. You really want to I loved years ago, an organization that I was working with. They had their accounts payable, I think it was in 30 days, but they were buying stuff from China, and their accounts payable were 120 days. The receivables were 30 days, so they were getting paid in 30 days, but their accounts payable was 120 days. It was ridiculous how far out it was. So they were getting all this money in, and they could keep it because they didn't have to pay for it. But then the other side of that, that company did eventually go under because they didn't actually manage that really well. Well, that was one component. There's another component, but then they had all this cash and they weren't effectively managing that. They actually had to pay it at some point in time, and then they started spending money on capital improvements and other things, and then when they actually had to pay it, they didn't have it there. But there was a couple of other factors they had with quality that affected that. I digress, but making sure that your receivables are up to date, that you have good communication. This is that people part I was talking about before. You need to have good people relationships, communication relationships with your clients to make sure that you are getting paid on time, and structure that. And then we come back to the contracts. If you're in that position, you want to structure the contracts as much as possible to be paid, as early as possible. And also too, if you've got bigger contract amounts where you might have residual amounts or things like that being held, you want to put things in place to make sure that you can get those funds earlier rather than them sitting there for 12 months while you're waiting for a defects liability period or something like that to expire. There's better ways of doing that you can actually put in place and manage that concern that you might not actually be able to fulfill those obligations. But that's part of the contract side of things, and that all relates back to this receivables and managing those receivables well. The other one, it's really important, and I mentioned this before, companies, you can, with the technology available now, and companies do it, is have your accounts up to date at a minimum on a weekly basis. And some people are going, "What?" But yeah, this is where you need to be. The whole point of the accounts is to give you information. If you're doing accounts at the end of the month, and then the accounts are done at the end of the month, by the time they're finished and worked through and reconciled and everything's sorted out, it's another 2 weeks, if not longer. And then so you're 6 weeks to 8 weeks down the track. That information is no longer useful. Realistically, yes, it gives you some information, but realistically, as far as effectively planning, it's out of date, and you can't make those decisions that you could before, and save yourself a lot of trouble. So you want to have systems in place, and it can be done. It's not difficult to do. You just need to have the right systems in place so that you can get those reports. You can actually have accounts pretty much up to date daily if it's the right system in place. And that comes back to, again, having that organization we mentioned before, talk about the structure of accounts. Having a well-structured set of accounts makes a massive, massive difference in your ability to do that. So make sure, as much as possible, put in place systems, do whatever you need to do to get in the process of having accounts as live as possible, showing you this is the state of affairs right now, or if not, no more than a week out of date. The other thing on accounting is avoiding too much debt. 90% of companies under stress usually have some component of a lot of debt that is unnecessary, and this is where you need to be careful. And it comes back to, again, your short-term capital operations of managing receivables, keeping your costs in check, managing that in a way so that you actually have a good operating capital to operate from. While then you don't have to be drawing on debt, because it's just another cost. It's much more, it's affecting your bottom line. Yes, you might have access to some debt to do things, but the best thing you want to be able to do is try and minimize that as much as possible, because it's going to, especially when there's some leaner times, there's things you can do, but to reduce that burden, that expense burden. But if you've got a debt there, that debt's not going to change, or the obligation to pay that debt. So that's going to be something that's affecting your monthly cash flow. And of course, you can negotiate it, but the best thing to do is manage that debt effectively. Have a ratio in place that is comfortable for you, and stick to that ratio. Just have the discipline to stick to it, which then links to the other point I just mentioned there about having adequate levels of working capital. I remember reading about Bill Gates when he started Microsoft, and he had 1 year of employee salary in the bank. He just kept it because he didn't. In his statement, he said he didn't think they were going to survive, and he just didn't want them to miss out. So he kept that there, and that became a massive amount as the company grew. And this is where that working capital, having that there, being mindful of that, of not running too lean on that, having that little bit of extra capital there that you can draw on if you need to when times are tough, or if you need to, if you might want to have a sales splurge, a big marketing campaign or something like that, having the capital to do that without putting yourself at risk, because not all those things work. Sometimes you might have this great idea for a marketing campaign and you put it out and it just fizzes. And if you've got very, very low working capital to draw from, that's adding risk to the company because you're not getting that return. So you want to be make sure that you actually keep a decent level of working capital in place. And I know it's a fine balance, but it's the risk to your business if you don't is quite high. The other thing. One last thing that I want to go through is investing in your company. And you've probably heard it said, so many times, and whether you're a small company or working within a big company, or you're the owner of a big company, but investing, working on the business as opposed to in the business. And more often than not, we get stuck in this busy work, the day-to-day work, the things that need to be done. Of course, they need to be done, and forget about working on the business. And this is part of that strategic plan that you have in place, and taking those steps to have a process for attracting new customers, for improving the process for managing existing customers, improving your referrals process. Those three things. The last two are the best ones. If you're already starting up, if you're already an established business, if you're starting up, you've got to go out and search for new customers. But if you have a good process in place for managing existing customers and a good referral process, that takes care of a lot of your marketing. Elon Musk was fantastic at that with Tesla. When they first started, there was no advertising at all. Yes, there was a lot of social media, but there was a lot of referral, and created the buzz that way. You can create that goodwill with your customers, where they actually value what you're doing for them and want to recommend you, and you have a process in place that helps them recommend you. It just completely slashes your need for marketing. Yes, you can still do some, but it will reduce that cost significantly. So this is where that investing in your company is really, really important. And the other component of investing in the company is investing in the employees. And this is where programs like our exceptional effort, having a continuous improvement process, which we have a specific module for that. It's really, really important to have that in place, because not only are the employees, it's difficult to find today because the demographics have shifted. There's a whole, the baby boomers are retired. There's a difficult to get workforce out there. But the other thing that very, very, very few companies, and it always astounds me, you will go and they'll spend hundreds of thousands of dollars on an external consultant firm to come and give them advice as to how to do things, systems better and processes better. All those people that you already have employed are being paid by you. They all have amazing knowledge on what's working and what's not working. Having the right process, having the ability to draw that out from them and implement them, and that's something that we do exceptionally well, is being able to draw that information out of the employees. It's no cost to you. You're already paying them, and then you implement that because they know what's going on. The employees know what's going on. You just got to have the process of bringing that out in them. So investing in your company is, looking at how, it's operating, but also to paying attention and drawing that information out of your employees will give you significant dividends. So there are a couple of key tips on accounting. Hopefully that's been a bit more exciting. I think it's exciting. Hopefully you've been excited by that as well. But the accounting component of a company is really, really important to growing your revenue and profit. So this has been Damien Andrews for Growing Revenue and Profit.